His grace we all arise. To our Creator praises we sing. Moving together, every day we grow. Our hearts so grateful, forward we march. I am a member, you are a member. We are united by equity. Equity, our listening, caring partner, transforming people's lives. I am a member, you are a member. We are united by equity. Equity, our listening, caring partner, transforming people's lives.
Esteemed shareholders, Board of Directors, management, staff of Equity Group Holdings PLC, ladies and gentlemen, I welcome you to the 20th Annual General Meeting of Equity Group Holdings PLC. My name is Professor Isaac Macharia, the Chairman of Equity Group Holdings PLC Board of Directors. I will now ask Reverend Evans Miranga to start us off with a word of prayer. Reverend Evans.
Thank you very much, Chairman. Shall we pray? Everlasting God, Father of our Lord Jesus Christ, we come before your presence this morning with humility and thanksgiving, acknowledging your sovereignty and grace in our lives. Thank you, Lord, for the gift of life this morning. Thank you also for the strength that you have provided us even as we begin this meeting. Lord, we want to thank you because when this meeting was set, Lord, you have made it possible for us to be able to gather. We commit this Equity Group Holding PLC 20th Annual General Meeting before you, praying for all the shareholders, those that are physically here, Lord, and even those that are following us virtually. We acknowledge, Father, that your hand has been with us in all the years that we've been operating. And we want to thank you, Lord, for the achievements. Thank you for the milestone, and thank you for the far that you have brought us. As we proceed, Lord, we invite your presence to guide us and to bless all the discussions and the decisions that we take. We want to commit our chairman before you. Even as he leads us through this meeting, may you continue to give him renewed strength that he may lead us to the very end. Bless all our plans, programs, and projects, so that we may achieve all our objectives. Let everything that we do here today bring honor and glory to your name. We seek your guidance, wisdom, and blessing. For this we pray in Jesus Christ our Lord.
Shareholders, today I'm joined by your directors and other officers of the company, some physically and others virtually. Allow me to introduce those that are physically here. Dr. James Mwangi, the Group Managing Director and CEO. Mr. Moses Nyambanda, Group Chief Finance and Strategy Execution Officer. Ms. Gertrude Karugamba, Group Chief Legal Officer. Ms. Angela Okinda, MD, Equity Life Assurance Kenya Limited. Ms. Lydia Dirango, Group Company Secretary. The representative of our external auditors, PricewaterhouseCoopers, Ms. Bernice Kemashia. The representative of our corporate lawyers, ALN Kenya, Mrs. Rosa Duati Mutero. Our sign language interpreters, Elizabeth and Boniface. Shareholders, we also have other members of the board who are attending this meeting both here in person and virtually. I will proceed to introduce them as well. Dr. Edward Odudo, Non-Executive Director. Dr. Helen Gishohi, Non-Executive Director. Mr. Vijay Gidmore, Non-Executive Director. Mr. Jonas Mushosho, Non-Executive Director. Dr. Evans Vaya, Non-Executive Director. Mr. Samuel Mware, Non-Executive Director, subject to regulatory approval. Esteemed shareholders, I will now call upon the Company Secretary to report on the registration and confirmation of shareholders and to confirm the presence of a quorum or otherwise.
Thank you, Chairman. The quorum for the annual general meeting is a third, which is 33.3% of the issued shares. I confirm that a total number of 7,824 shareholders holding a total of 2,503,667,679 shares, representing 68.48% of the shareholding, are attending this electronic annual general meeting. I therefore confirm that we do have quorum for this meeting.
Having confirmed, I declare the meeting to be properly convened and duly constituted. I call upon the Company Secretary to read the highlights of the notice and agenda of convening this meeting.
Chairman, I confirm that the notice and agenda of the meeting, as outlined on pages 265 to 268 of the Integrated Annual Report, was published in the daily newspaper, the Daily Nation, and the Standard on the 4th June 2024. Additionally, the notice was published and is on the company's website until now. Chairman, we will have ordinary business and special business to conduct today, and Chairman, we will take the notice as read by the shareholders, having been circulated on time. Thank you, Chairman.
Ladies and gentlemen, we will now commence the formal business of today's meeting. Shareholders, the 2023 annual report and consolidated audited financial statements were made available to all shareholders through a publication in the local dailies, and the full report was made available on the company's website, as indicated in the notice convening this meeting, which was published on the 4th of June, 2024. Shareholders, my report to you for the year ended 31st December 2023 is contained in the integrated report on pages 23 to 24. I shall take the report as read. The integrated report remains accessible on the company's website. I encourage all shareholders to read the detailed statement for information. I will only give a few highlights of my statement. Ladies and gentlemen, the economic scene in the year 2023 was marked by uncertainty and instability. The emergence of conflicts, notably the Ukraine-Russian war and the Israeli-Palestine conflict, amidst the reopening of economies after the pandemic, presented complex challenges impacting efforts to economically bounce back due to geopolitical factors. These uncertainties caused disruptions to global supply chains and trade routes, and as a result, the global trade growth at 0.2% was the weakest performance outside of global recession in 50 years. The regions in which we operate continue to experience the impacts of the global realities, including marked interest rate hikes by regulators, currency depreciation, discernible escalation in the cost of living and inflation, coupled with increased concerns on debt sustainability. Despite all those challenges, I am delighted to note that Equity Group registered a significant revenue growth of 25% from Kenya shillings 145.9 billion to Kenya shillings 181.7 billion, and a profit after tax of Kenya shillings 43.7 billion as at 31st December 2023. This showcased the continued resilience and fortitude that define the group and their unwavering commitment to our stakeholders. Subsidiaries in the Democratic Republic of Congo, Rwanda, Tanzania, and Uganda increased their contribution to the overall revenues alongside our investment and insurance offerings. This underscores the pivotal role of diversification as a cornerstone of the group's enduring performance. In acknowledging the profound implications of the economic challenges, we recognize the ripple effects reverberating through to our stakeholders, and particularly our customers, who have had to bear the brunt of multiple impacts on their businesses and livelihoods. As a group, cognizant of the implications of these challenges to our customers, we consciously choose to proactively support our customers through relevant, affordable, and easily accessible services and products. We understand that behind every account or transaction is a unique individual, all organizations with specific requirements and goals. In line with the diversification strategy, Equity aims to not only leverage on the existing life assurance operations, but to also grow and expand its footprint in the insurance sector. Equity purposes to offer uniquely designed health insurance solutions anchored through the Equity Afya Network and other healthcare providers by tapping into our extensive non-digital and digital rails. The combination of life, general and medical insurance products will complement Equity Group's core banking operations and its African Recovery and Resilience Plan. This strategy aims to offer integrated financial services to both corporate and retail customers by availing insurance solutions at the point of sale or interaction, lowering customer acquisition costs, and charging affordable premium rates. At a broader level, we continued stakeholder engagements with key partners as we sought to catalyze interest and involvement in the Africa Recovery and Resilience Plan. We also signed up to the Task Force on Nature-Related Financial Disclosures as an early adopter. Our social agent, the Equity Group Foundation, continues to provide support on environmental and social needs, with total funds raised as at 31st December 2023 being USD 649 million. The funds were utilized in supporting 60,009 scorers, training 517,247 micro, small, and medium enterprises on entrepreneurship, training 2.4 million women and youth in financial education, planting 25.2 million trees, and reaching and impacting 3.8 million farmers, among other beneficiaries. The Equity Afya franchise has continued to grow and has now expanded into the Democratic Republic of the Congo, where we are looking at establishing 30 clinics. As at 31st December 2023, Equity Afya Medical Center Network stood at 98 clinics and had attended to 2.1 million patients cumulatively. Our concerted endeavors have not gone unnoticed. The group's business model has received validation from various rating agencies and earned recognition at local, regional, and global levels. The bank was ranked second in the world's strongest and most valuable banking brands 2024 by Brand Finance, with a brand strength rating of AAA+. This is a testament that our purpose of transforming lives, giving dignity, and expanding opportunities for wealth creation is continuing to prove to be relevant to our customers, industry, and stakeholders. We remain steadfast in our commitment to enhancing governance standards, acknowledging the dynamic nature of governance amidst the continued growth and evolution of our group. This entails vigilance in response to both internal dynamics and external regulatory landscapes. Furthermore, we have reinforced the composition of subsidiary boards with strategic appointments, enriching our governance ecosystem with diverse skill sets and expertise, thereby ensuring robust oversight and strategic direction. A key highlight of the board was the acquisition of Compagnie Générale de Banque, also known as Cogebanque, in Rwanda following regulatory and corporate approvals that were completed in 2023. The group acquired 99.261% of the issued share capital of Cogebanque, which was the furthest largest bank in Rwanda, by assets operating through 28 branches. This strategic acquisition was in line with our geographic expansion strategy that includes identifying synergistic entities for acquisition. Cogebanque's acquisition and the subsequent amalgamation with the group's existing banking business positioned Equity Bank as the second largest bank in Rwanda after the merger. Looking ahead, the board of directors at Equity Group will devote its attention primarily to overseeing the implementation of the Africa Recovery and Resilience Plan. The Africa Recovery and Resilience Plan is a strategic initiative designed by us to drive the socio-economic transformation of Africa, particularly in the wake of a global pandemic that underscored the need for resilience and recovery. This primary focus on the Africa Recovery and Resilience Plan is complemented by traditional areas of board oversight. Key facets of our operation, such as risk management, regulatory compliance, performance assessments, and reward system, will continue to be critical considerations. Likewise, novel spheres of significance such as sustainability practices and information technology demand the board's unwavering vigilance and oversight. Each of these areas brings distinct challenges and opportunities, requiring ongoing analysis, prudent judgment, and decisive action. Sustainability continues to be deeply ingrained in every facet of our operations. We continue to craft and execute strategies aimed at minimizing our environmental impact, preserve resources, and bolster business resilience. As we progress on our trajectory, we hold firm to the conviction that robust, adaptive, and accountable governance is paramount in realizing our strategic objectives while fostering enduring value for our diverse stakeholders. The board is continually inspired by the unwavering dedication and passion exhibited by the group's leadership. Through their consistent courage and vision, our leadership has steered the group with remarkable resilience. They serve as the embodiment of our mission, shaping our organizational culture and charting a course for future growth with strategic foresight and unwavering judgment. Our customers form the lifeblood of our organization. They are at the heart of everything we do, from strategy formulation to product development and service delivery. We also recognize our other stakeholders, including investors, strategic partners, regulatory bodies, and the larger communities within which we operate. Their roles, influences, and interactions fundamentally shape our organization's direction. making them intrinsic to our operations, strategic decisions, and success. The board views this display of collaboration not merely as an asset, but as a vital force imbued within the group's DNA. It is what gives us confidence in our ability to deliver on our promises, navigate uncertainties, and build the foundation upon which our future success will be built. Thank you all. Shareholders, I now invite the Group Managing Director and CEO of the company, Dr. James Mwangi, to introduce the management team and to brief the shareholders on the year under review and the future prospects of the company. Dr. James Mwangi.
Thank you very much, Chairman. Esteemed shareholders, investors, we are delighted to be with you this morning as we execute the annual general meeting. I've been invited by the Chairman to introduce our management. Allow me, shareholders, to start by acknowledging the great support that the management team of Equity Group has delivered in achieving the year that was. At my office, I'm privileged to have two executive directors, and I want to introduce Mary Wamai and Sam Kirobe, the two executive directors who have stood with me. Shareholders, allow me to introduce the others as we move on. Ladies and gentlemen, welcome to our 20th AGM. The Group Executive Management team is highlighted on page 33 to 34 of the Integrated Annual Report. Shareholders, my report to you for the year ended 31st December 2023 is contained in the Integrated Report on pages 26 to 28. I shall take the report as read. The Integrated Report remains accessible on the company's website. And now, shareholders, I'll proceed with my presentation. Allow me to start with 2023 performance. When we look at the balance sheet, and the Chairman has ably communicated to you the operating environment, we see the balance sheet, total assets, growing by 26%, and strong resilience in mobilization of deposits by 29%, and our loan book growing at 26%. Shareholders, this reflects the resilience that this group has been able to build over time, and hence able to ride the challenges the Chairman ably talked about of inflation, exchange rate, high interest rates, and generally operating within a VUCA environment. I wish to point that the group remains resilient, founded on three strong buffers. One, our strong capital base of 218 billion, which grew by 20%. Our strong liquidity reflected by the cash and cash equivalent and government securities, which grew at an average of 26%. And of course, the agility of the balance sheet with a liquidity of nearly 54%. Liquidity continues to be a big buffer during hard times, and the back of challenges is backstopped by your shareholders' funds that continues to give us strength. While the balance sheet reflected great resilience, the marketplace was too volatile. We were operating in a VUCA environment. So the same resilience is not reflected in the profit and loss, because this reflects the activities of our customers. We are an aggregation in the marketplace of all the transactions of the individual customers. So while our interest income grew at 30%. Our interest expense grew even much faster at 53%. And we see the implication of high interest rates destabilizing our top line. Our non-funded income continued to show strength and resilience as we moved to support our clients with non-funded assets like LCs, guarantees, and we strengthen our treasury activities in trading. However, given the challenging environment, we saw our loan loss provisions growing by a whopping 139%, while our staff costs, because of inflation, grew by 128%, and our other operating expenses, because of the imported component of the services, particularly IT services, services by global service providers, reflected the volatility in our exchange rate and high inflation, and grew by 39%, making our total cost to grow at 52% as compared to 25% of total income. And that had significant impact, lowering the growth rate of our profit before tax by 13%, and our profit after tax by 5%, the first year in many years to record a declining profitability, reflecting once again the operating environment, the volatility, but as we can see, it's to a great extent NPL position, inflation, volatility in exchange rate, the impact it had on cost, and of course the top line. This has given us a focus to see how we could be able to continue to strengthen this. And we have hedged against the significant impact by focusing on our diversification, and the regional or subsidiaries reflected the impact that they could have. And we have seen significant reduction on Equity Bank. It now on Kenya, it only now contributes 50% of our total deposits, 51% of our loans, and 56% of our profit after tax, showing the significance that our regional subsidiaries, led by Equity BCDC in DRC, which contributed 32% of deposits, 32% of loans, and 25% of the profit. And we see the significance of continuing with this strategy and deepening it also from a product lead. So when we look at the subsidiaries, we now have become strategic players in all the markets that we operate in. We see Kenya, we are playing in position 2. DRC, we are in position 2. Rwanda, we are playing in position 2. Tied that is to the acquisition that the chairman talked about of Bank. And we have improved significantly our position in Uganda, where we are now playing at position 5, and position 4 in South Sudan, and continuing to improve from position 14 in Tanzania to position 13. So we have become a systemic regional financial service providers. Shareholders, as we considered the possibility of paying a dividend, we were cognizant of the challenges that we have talked about, a very volatile operating environment, a deteriorating loan book, and this helped us to consider the dividend payout. We retained the dividend payout, recommended dividend payout similar to the previous year, that played out to a payout ratio of 36% compared to 33.6% the previous year. A significant improvement. But earnings per share had declined from 11.9 to 11.2. So we compensated by increasing the payout ratio and retaining the dividend of 4 shillings per share, giving us 15.1 billion shillings as dividend payout, again matching our record payout in the history of the company. We are grateful that the retained 64% will support in funding the growth we have seen in our subsidiaries, and will continue to provide the capital buffer that is required and necessary during volatile times. We recognize that regulators are constantly increasing. We have seen in Uganda, the capital requirements have been doubled, and in Kenya, the capital requirement has been increased tenfold. But shareholders, I'm happy to report to you, given our balanced dividend payout, we have been able to meet the capital requirement even with the tenfold increase that has been proposed in this year's legal framework. Shareholders, turning to the employee share ownership scheme that you approved last year. This year we are coming with the employee share ownership scheme, or ESOP as we further call it, bringing the trust and the rules that will govern the allocation of the shares. But shareholders, we have started seeing the significant impact that ESOP will have in this organization. It has helped us to attract new talent. And as the chairman was introducing the team accompanying him this annual general meeting, Moses Nyambanda, former managing director of Pricewaterhouse, Rwanda, and with oversight for a significant portion of East Africa, has joined the group. We believe this is significantly contributed by the belief that we have a long-term reward system for our staff. We've also got Natasha Ansel joining us as our group commercial director, and Ansel brings significant experience, having worked with the Citibank for 28 years, culminating as a managing director of Citibank Vietnam, and prior to that as managing director of Citibank in Ukraine. And that experience will help us to strengthen our internal control, our operating environment, while at the same time strengthening our commercial outlook. Beth Kithinji was previously the advisor to the Central Bank Governor of Kenya and head of internal audit and risk management at the Central Bank of Kenya, has joined us as head of our internal audit department. Again, we can see the promise of a share ownership scheme, the alignment of staff to the long-term interest of the shareholders has helped us. Gertrude Karubanga, who's sitting with the chairman at the high table, has joined us as the chief legal officer, joining us from Uganda, where she was the commercial partner in the leading commercial legal firm, DLA and Piper in Uganda. So we see Lene Karonji joining us from JP Morgan to come and head our product house. Hughes Efoke joining us from MoneyGram to come and head our payments. And when you look at this brings the global skills that will enable us now to match the global brand that we have built with global operational capability, global commercial capability, and harmonize what happens within the organization. We've also been joined by Amrit Gayan to manage our group services, Dr. Patrick Gatonga to manage our health program, Wafura to help our internal control. And when you look at the team, they bring enormous experience. So even before putting in place the employee share ownership program, we see the thought by the shareholders to approve it has created an enabling environment. We've also been able to retain very key staff, and we believe that the retention program, and we have people like Thelma Akananga, who is our cyber risk officer, and who this year was ranked as the highest rated cyber risk officer in the world. We have Emmanuel Makde leading our credit origination, Sam Kitwekere leading our credit risk and underwriting, Michael Coffey from Ghana leading our systems, Brent Malhai. So we are retaining the talent that helped to build this bank. Joy Benedicto, who has helped us to build the global brand that Equity has become. Ajera Okidia, who has helped us to start on a very high footing our insurance business. David Sengawa, who has helped to put this talent together. David Gata, who has helped us to maintain our reporting. And Christine Brown, who has helped us to manage our distressed book, demonstrates the power ESOP would have. And we are also glad that young leaders who have grown within the organization, led by Samuel Kerobe, our first equity group leaders scholar, Lydia Dilango, our tax expert, Mary Ntele, financial reporting, John Juguna, capital allocation, John Wamai, all have remained inspired by this long-term retention program. And so we want to take this opportunity to thank the board for consideration of setting ESOP, and now request to extend the same consideration as they approve our trust deed and the rules of the trust, so that we can operationalize the ESOP, so that we can continue to attract, retain, inspire, and develop our human capital. Shareholders, we recognize that there is no organization that can be better than its staff and management. And so the better the quality of our management, the better we become. Equity has grown, and as chairman expounded, is now ranked the most valuable brand in East and Central Africa, and Africa's strongest financial brand, and the world's second strongest financial brand. Our efforts to diversify through regional expansion and deepening our offering have led us to have a very wide structure spanning over banking, insurance, technology, foundation, health, and real estate, because of our huge asset portfolio in DLC. This has prompted us to rethink how we would be reorganized, and we, shareholders, we are putting before you a proposal of reorganizing ourselves so that we can have 4 holding companies: the banking holding company, the insurance holding company, the technology holding company, that you have all, which all you have approved. But now we are seeking to build a ultimate holding company that becomes the investor in those holding groups, and we can have the holding group of each of the 4 companies groups having very specialized skills and focus, also that we continue to strengthen the group. The structure of the group essentially has as we have said, will be broader. It will embody the governance, it will embody the oversight, and what we're asking is the setting up of the Equity Group Holding PLC and separating it from Equity Banking Group, which has been acting as the holding company, so that it's not the banking holding group that exercise oversight over insurance or technology, but we have. Shareholders, we can't thank you enough for allowing us to present last year our intention to acquire Cogebank, a transaction that we are bringing forward to you for ratification. The acquisition of Cogebank has given us significant market share, increasing our market share in Rwanda from 12% to 18%, making us a systemic player in that market, and giving us a chance of now competing for the top position and enabling us to deploy capital and to grow the business. This essentially makes Rwanda to compete with Kenya and DRC being in the top 2 banks in the market, bringing efficiency and scaling the great cost-income ratio that we enjoy in Rwanda of 36%, over 1.5 times the balance sheet that we used to hold. Shareholders and investors, we talked at length about the brand, and take a lot of pride on the brand that we have been built. This brand was built on the social impact. When we built the social impact investment engine that eventually became Equity Group Foundation. Equity Group Foundation has really anchored our effort in de-risking, capacitating, and enabling customers to grow within the bank. And our growth is attributed and directly related to the growth of our customers. This role that Equity Group Foundation has played, we have appreciated how it has positioned us, a soft brand, a brand globally recognized, and we have decided as management to enhance that brand by extending beyond social to sustainability, such that we look at governance, we look at social, we look at economic, and the sustainability of the entire operating environment. So we are rebranding Equity Group Foundation from just being a social engine, but a sustainability engine, and strengthening it significantly. The impact of Equity Group Foundation makes us proud to be associated with that. It gives the Equity Group a human heart, a soul that makes us associate with it as human beings, and it continues to inspire staff to become better people. The impact continues to grow. We have now scaled up health, and I'm glad to maybe inform you shareholders that we now have 118 hospitals at level 3 and level 4, and those hospitals are now, month of May, were able to attend to over 101,000 patients in just one single month. Ideally, we went to health because we realized 40% of our default rate only occurs when a customer or a household gets a health incident, and then the cash flow of the household is diverted to attend to the needs of a needy or a sick household member. This Equity Afia, the network, the franchise that we have provided, combining with our health insurance company, will significantly reduce this, and we are looking at better days ahead. Shareholders, we recognize that this performance reflects the past, but you invest for the prospects of the future. When we look at the future, we are confident that better days are ahead of us. We are now a systemic bank in the entire East African region, an East African region that has emerged to be the fastest growing region in the world. So our outlook is positive. Despite the challenging microeconomic environment, we feel that will be countered by the strength and momentum of growth in the region, and wish to assure you that better outcomes. We've been able to attract and retain highly talented human capital, and we believe this is a human resource that has the capability to confront the challenges. They are highly experienced and have seen through the cycles in the financial sector, and we believe will help us. Beyond the region becoming the fastest growing region, we believe there are underlying factors like available arable land, the rich wealth that DRC holds of strategic green minerals, the infrastructure development in the region, the democratization that we have seen in the region, the resilience and recovery that Tanzania and Rwanda, which are among the top 10 fastest growing countries in the world, provides us with an opportunity to continue to deliver high performance, high return, and high wealth creation for you, our shareholders. So I want to leave you with the trust and confidence that the future will continue to look better than the past that we have had together, a past that we are proud of when we recognize that 31 years ago we were number 66 out of 66, the smallest financial service provider in Kenya, and we now have become a systemic financial group in Kenya, and we are no longer a Kenyan group. We are now in 6 countries, and out of those 6 countries, in 3 of the countries, we are in the top 2 largest financial service providers. That gives us confidence that the experience that we have gathered, the exposure that the 32 years have given us, we have learned the lessons and have developed the insights that will help us manage volatile environments, challenging environment, to continue to give you a great return. We deeply appreciate the support you have continued to give, the understanding that you have continued to offer us, the guidance as shareholders you have continued to give us, and we want to express our gratitude to you and give you our commitment to remain steadfast for the purpose that we are called to, of changing lives, empowering people, and expanding their opportunities for wealth creation. I thank you. Chairman, I'm grateful for the opportunity. Thank you.
Thank you, Dr. Mwangi. Shareholders, the director's report was also circulated with the integrated report, and it is contained on pages 103 to 104. With your permission, I shall take the report as read. I now call upon Ms. Bernice Kemasha of PwC, our external auditors, to read the external auditor's opinion, which is part of the external auditor's report appearing on pages 109 to 122 of the integrated annual report for 2023. Ms. Kemasha.
Shareholders, our full report is available to you in the integrated report as indicated by the chairman. It was issued on the 28th of March and includes a number of matters that we are required to report to you in relation to our audit. These include the responsibilities of the auditors and the directors in relation to the financial statements, key audit matters, as well as our report on the director's remuneration statement. Shareholders, I will request that the report be taken as read, other than our opinion, which I will proceed to read. It reads that we have audited the accompanying financial statements of Equity Group Holdings PLC and its subsidiaries on pages 123 to 242, which comprise the consolidated statement of financial position as at 31st of December 2023, and the consolidated statements of profit or loss, other comprehensive income, changes in equity, and cash flows for the year then ended, together with the company statement of financial position as at 31st of December 2023, and the company statements of profit or loss, other comprehensive income, changes in equity, and cash flows for the year then ended, and the notes to the financial statements comprising material accounting policies and other explanatory information. In our opinion, the financial statements give a true and fair view of the financial position of the group and the company as at 31st of December 2023, and of their financial performance and cash flows for the year then ended, in accordance with IFRS accounting standards and the requirements of the Companies Act 2015. Thank you, Mr. Chairman.
Thank you, Ms. Kimasha. Shareholders, as you all are aware, shareholders were given an opportunity to ask questions and seek clarifications prior to this meeting with respect to the financial statements and the resolutions contained in the notice and agenda of this meeting. Responses were provided to shareholders who asked questions and sought clarifications prior to the AGM. The responses have been published on the company's website. Having said that, we will provide an additional opportunity to the shareholders with additional questions to ask this question using the questions button on your streaming device or via the mobile phone USSD code appearing on your screen. Please note that we will try as much as possible to respond, but due to the time limitations, we may not address all of them. Therefore, all questions received will be collated and the responses will be published on our website after this meeting. Shareholders, let me now invite those wishing to call in with questions to proceed and dial in. I wish to request those that will be calling to state their names and where they are calling from, and please keep your questions brief so that we can take as many questions as possible. Thank you. Hello.
Hello, good morning.
Good morning, sir.
Oh, my name is Daniel Timodo,
Yes, Daniel.
And I hope you are well together with your board and management.
Yes, Daniel, where are you calling from, please?
From here in Nairobi.
Thank you. Go ahead and ask your question.
Okay, first of all, I want to take this opportunity to thank you, Chairman, plus your board and management for our job well done in the year under review. When you look at all the parameters, regardless of the very many challenges that we went through, you have posted very good results, even without mentioning each and everything, but you have done excellent. So thank you very much, and continue with that spirit. I also want to thank you, you and the management and the board, for a balance sheet of almost 2 trillion. That is very good. I heard you saying you are number 2 bank in the world in of brand. Excellent. I also want to thank you for all the awards that you received in the year 2023, which are many. I won't mention any, but thank you very, very, very much. If you are recognized, not even in Africa, but worldwide, that means that you are impacting the whole world. I have 2 questions, and then I have 1 comment. Question number 1 is that there was very, very strong performance in Tanzania, in Rwanda, in DRC, and even Sudan, even if the profit was almost at par. And I can see that there was huge increment in profit in DLC. And in my own assessment, I see DLC contributing over 50% of the total profit to the group. So, but there was reduction in Uganda. All the performance, all the parameters in Uganda were okay. There was increase in revenue, customers' deposits. There was also increase in customers, but the profit decreased by almost 50%. So I don't know what contributed to that. Even in Kenya, but in Kenya we know that there were so many charges, and because I am a Kenyan, I won't ask about Kenya, but in Uganda, I don't know whether they were going through the same charges that we were going through as Kenya, yet all the other subsidiaries contributed to profit. So what happened in Uganda? Question number 2, the group acquired 198,250 shares of Kogi Bakwil, that name is hard, another bank in Rwanda at a cost of 7.2, and I want to thank the management and the board because of your visionary thing. And you have said that that bank contributed the 51 million in the group as at December alone. So my question is, going forward, because I have seen even Rwanda is performing very well, and Rwanda being the fastest growing economy together with Tanzania, where do you see this bank that you acquired in December last year contributing to the bottom line? And that also, I thank you because you never came to us for a right issue of this 7.2 billion. That means that you have enough reserves. Question number 3 is about the insurance. In your insurance sector, the bank assurance and equity, all those things that deals with insurance, it brought about 934 million, and you already have at the close of the year 9.9 million policies, hoping by now maybe they are 12 or something. And there is a policy, an accounting policy from IFRS 4, which governs the insurance, to IFRS 17, which is now in operation worldwide, just as FRS 9 came. So I don't know, how has this IFRS 17 policy impacted on your results, and how will it affect it as we go ahead? And question B of that question, you have, I don't know, these 9.9 policies are in which country, for example. Maybe Kenya has contributed a lot. So my question is, are you selling all these policies to all your customers in the 6 countries that you operate, and especially in PLC, where that is a gold mine as far as I am concerned? The last question, because I know there are many who are asking, I saw about the remuneration of management and the board and everything. And I saw our very hard-working CEO, that is on page 116. You gave him salary, you never added from 2012, but you omitted to give him a bonus. Honestly, the board, this is to the board. With all the work that the CEO, who is the driver of this vehicle, did, and with everything that we were able to achieve in the year 2023, didn't you see it prudent to give him a bonus, even if I know he worked for the group and that is in his heart? You as board, you ought to have motivated him by giving him a small bonus so that he can feel that you are also appreciating him. And I know you appreciate him. I know he does a very good job, but kindly, because you know he might not ask you to give him a bonus, consider him a bonus in the year 2024. Thank you very much. I had other questions, but because of I'm not the only one asking questions, let me rest with those ones. And I wish you a very, very, very prosperous year in the year 2024 as a group, and even as all the other things that you do. Thank you very much.
Thank you very much, Daniel, for your comments and your questions. We shall collate all questions and then we shall answer them later. Thank you. Hello. Good morning.
Good morning, Professor. Good morning, Professor. My name's Anzau Jones.
Yes,
From
Nzao.
Machakos-
Good morning.
From Machakos. I want to start with a few comments and then I go to very limited questions. Mr. Chairman, I would want to commend you and your board and the management for steering our bank to high standards. It is my humble prayers that one will still be growing on knowledge to steer our bank to the highest. Let the sky be the limit, Mr. Mwangi. The other issue I'm going is to comment on Rwanda. It's presumably Rwanda should be number one very soon, and we want to see it, all efforts put to Rwanda so that it can grow quickly like DRC. Mr. Chairman, my question goes to Mr. Mwangi. He promised the 18 that he's going to steer business on youth and women on SMEs to a high percentage. I would want to know how far it has gone. Mr. Chairman, I'm also asking a question on NPL because NPL has not shown any significant movement. We want to put more efforts on lowering on this NPL. Mr. Chairman, I am also commending on the introduction of the scheme of work because these employees will now work without limitation and give us all services to us and make sure our bank is growing strong. This is a very good move and I commend it and I am happy to hear that. Mr. Mwangi, I will also ask him a question because we are already spending much more money on education and we will want, we agreed one time few shareholders should come and make some comment on how we can run our CSR because our CSR is now confined on education and the other items which we should also expand because now we are growing a bank and a bank and a bank and we have to show our initiative and we have to show our concern to the community. With those two questions, I'm happy and thank you.
Thank you very much, Mr. Nzao. We shall answer you.
The last comment is on image registrar. Regiment registrar is doing a fantastic job. This link has been a very productive one. Thank you and let them keep it up.
Thank you. Image registrars, they are present. They are hearing your commendation. Thank you, Mr. Nzao. Hello, good morning.
Good morning, Chair. My name is Sally Chepkorir, a shareholder of Equity, a very passionate shareholder.
Welcome, Sally.
Formidable, objective and treasured board of directors of Equity Holdings, our prolific and brilliant CEO that stands the test of all times and at all times, Dr. James Mwangi, the management and staff. My name is Sally Chepkorir.
Thank you, Sari. Go ahead.
Yes. Chair, we are cognizant and alive to the fact that incredible leadership is the bedrock of every success in any given institution. So allow me to commend you for the job well done.
Thank you.
Mr. Chair, today I don't have questions because Dr. James Mwangi is too brilliant for my questions. And if I'm to ask, it is just for formality.
Thank you, Sally. I'm glad that James has answered your questions before you asked them. Sally, where are you calling from?
He's too intelligent. He's too intelligent for my question. But like this one of a brand, let me ask. But I have a comment first on cybersecurity. That I want to commend the ICT team for managing the ICT so well for the purpose of protecting sensitive customer data from cyber threats and ensuring data privacy compliance. Of late, fraud cases is a thing of the past in Equity. I want to laud Moses for his intelligence, for bringing the intelligence and the expertise in the ICT team together with Mr. Kirubi. I want to say thank you and the team.
Thank you, Sally, for
The question that I wanted to ask is on brand, but he has already answered. But I will still ask him that in the midst of a strong competition, what measures have you put in place to ensure you protect the strength of your strong brand in quality of your products and customer centricity? And then the final question is, what is your area of focus this year? And what does the future hold for the company? Thank you so much. Today I'm not singing because the choir has already sung in the morning, and my voice is not good because I'm having a flu.
Thank you, Sally. We wish you quickest recovery from your cold, and thank you for the positive feedback. Thank you.
Thank you so much.
Hello, good morning.
Hello, good morning, Professor.
Good morning.
Thank you very much, Group Chairman, Professor Isaac Macharia. My name is Joseph Mutegituma from Meru County.
Go ahead, Joseph.
I thank you on board, management, and the entire staff of Equity Bank, led by Dr. James Mwangi, Group Managing Director and the Chief Executive Officer for a job well done. Dr. Mwangi started to be associated with the bank when it started as a building society in 1993 at the age of 91 years old. Dr. Mwangi joined the society and made a lasting effort to stop the closure of Equity Building Society, which and lived into the 9th year of operation under the weight of insolvency. Now, that 1 year from 1993, you can be proud of Equity Bank, of where it has reached today. Ongera Daktari. I thank the board for giving Metongo people a branch of Equity Bank. Thanks to MD Equity Bank Kenya and Metongo branch manager for organizing SME forums in Meru and Metongo County, Metongo branch. Thanks, Gerald. My question, Mr. Chairman, is when are you opening officially Metongo branch? We want to arrange a market storm and road shows to neighboring towns like Kitonyai, Chiokariga, Nkarini, and Marimanti. Please, Mr. Chairman, consider to open another branch at Marimanti, where Zaraka University is situated, so that you can be ahead of our competitors. Finally, Mr. Chairman, convince you on board to choose a registrar to manage shareholders' shares and the payments. I thank you, sir.
Thank you, Mr. Gituma. Your questions will be answered, and thank you for acknowledging the MD of Kenya for giving you a branch near where you live. Thank you. Yeah? Okay. We are finished. Thank you, shareholders. I think that we had only time for those few questions. Before we proceed to respond to the questions, we shall provide you with the guidelines on how to cast your votes for the resolutions placed before this AGM, as summarized in the notice of this meeting. Please watch the upcoming video, which will guide you on the voting process.
Welcome to the Equity Group Holdings PLC Annual General Meeting. Once voting is open, you will receive a USSD code on your phone with guidelines on how to vote. You will then receive a prompt on your mobile phone or email asking you to key in and dial the code using your mobile phone. You'll be required to follow the prompts to cast your vote. The voting process will be as follows. Registered members will key in and dial the code *483 star 830 hash from any mobile phone network in Kenya, or star 370 hash for Equitel lines. You will then be prompted to select your preferred language. Once you've chosen your preferred language, the next prompt will be as follows. Welcome to the Equity Group Holdings PLC. Reply with 1. Once you have responded, you will receive the following prompts. To approve the annual report and financial statements for the year ended 31st December 2023, together with the reports of the chairperson, directors and auditors, reply with 1 if in favor, 2 if against, or 3 to abstain. Once you have responded, you will receive the following prompts. Continue following the same prompts for all the other resolutions. Once the vote is made, you will receive a final prompt confirming your vote is accepted. For voting through the live stream dashboard, you'll receive an SMS with the live stream link. Once you click on the link, you will find the vote button on the dashboard. Click the button and thereafter click the voting options of your choice. Once completed, click the Vote for Motions button to complete voting. Closing of voting will be announced by the chairperson. Results of the resolutions voted on will be published on the company's website within 24 hours following conclusion of the AGM.
Ladies and gentlemen, we will now respond to questions from shareholders who dialed into the meeting. We have also received questions from live stream to which we will respond. I'll request our CEO, Dr. James Mwangi, to read this process. James.
Thank you very much, Chairman. Thank you, shareholders, for excellent questions. As Chairman indicated, we had received many questions, and we responded them online. But for the questions put, Daniel Kemotho's question, the first question on performance of Uganda and Kenya, I'll give it to our group Chief Finance Officer. The question on the Koje Bank in Luanda, I'll give it to our Chief Legal Officer who shared the task force that did the acquisition and integration. The question on insurance, Mr. Chairman, I'll give it to our Insurance Group Managing Director, Kinia Ajera. The question of remuneration, Mr. Chairman, allow me to leave it to you. I will deal with the question of Mr. Nzau Jones. The question of Sally on cyber shareholders, we have put a defense counsel. So I will ask a team of our chief internal auditor, our group finance director, our group cyber lead, Thelma, and Paul Wafura, our compliance, the defense counsel, maybe to respond to that question, and I will respond to the question of Joseph Getau. So if we can start maybe, Mr. Chairman, with Moses. Moses, performance of Uganda and Kenya didn't measure to the shareholders' expectations.
Thank you very much, Chairman and Dr. James. Daniel, you are right in your observation, and as a group, one of our key strengths is on the diversification strategy that the GCO did share. And when we look at our markets, we always look for either all of them to perform strongly, or where there are challenges, then each of them can compensate each other, which is what happened for the year ended. Directly to answer the question you've asked around Uganda, we did, as you've rightly noted, when you look at our top-line performance, that was strong, but we did have challenges with particular segment of our loan book And as a prudent bank, we took swift action and dealt with those. So we increased our provision, and that's what led to the decline in our Uganda performance. It's a one-off. We don't expect that to continue, Daniel, and we are making efforts to clean the book and ensure that controls are strengthened around that area. But going forward, Uganda will continue to perform strongly as management take action. You rightly pointed that we are in this Kenya market together, and the challenging macroeconomic environment has impacted the Kenya business. Again, something that management and with the support of the board, we are looking at how do we still strive despite a challenging macroeconomic environment. Kenya is on a turnaround path. We expect that will happen over the next 18 to 24 months, Daniel. So expect good results out of that. Thank you, Chairman, and thanks, Dr. James.
Daniel, maybe if I just add, I take personal responsibility as your group CEO, but confirm what our Chief Finance Officer have said. Uganda was one of, we had completed our audit and then realized what we suspected was a fraud incidents in agency loans, and we decided to be very prudent and take a conservative position. We have dealt with that, and we are resolving it, and hopefully when we report for the first half, you'll observe that Uganda has bounced back. In terms of Kenya, Kenya was the most affected by the global headwinds of inflation, turbulent microeconomic environment, volatile exchange rate, and high interest rates, because it was the most globalized subsidiary, with 40% of its loan book being in dollars, which are supported by long-term debt. And the Fed increased interest rates from 0.1 all the way to 5.5, moving our cost of debt, interest on long-term loans, from an average of 3.2 all the way to 10.5, as we have disclosed in the audited accounts. And that more than threefold increase in interest expense also explains why interest expense was growing faster than interest income. We anticipate as the macro environment unwind, Kenya will bounce back. So it's nothing systemic, it's macro playing out on our balance sheet. Gertrude, question number 2.
Thank you, Chairman and Group CEO. Good morning, shareholders. We're pleased to hear the support of the shareholders for the Rwanda transaction, where we acquired Koje Bank and have since merged Koje Bank with our subsidiary in Rwanda. As the GCEO mentioned, Rwanda is one of the fastest growing economies in Africa, and we believe that that acquisition positions us well to ride the tide of that growth. We will continue to focus on key sectors in Rwanda, which also align with our own plan that the chairman mentioned, but also from a segment-focused perspective, there is a lot of opportunity that we see in the Rwanda economy on the medium, small, mid, small, and large enterprises, and we believe that we are well positioned to do that. When you look at our performance year to date, we are encouraged that with the right team focusing on the right elements, that will continue to be a dominant player in Rwanda, but more importantly, increase the contribution to the group numbers. I think as the GCO mentioned, at the end of 2023, Rwanda contributed 9% profitability, 8% deposits, 6% loans. We're optimistic that we'll be able to increase that contribution into the foreseeable future. So we thank you, shareholders, for your continued support.
Daniel, if I just compliment on what Gertrude has just said, Rwanda is our most efficient subsidiary with a cost-income ratio of 36%. So this transaction, acquisition and merger of Cogebank, enlarged and expanded our balance sheet by 54%. So it is almost increasing the balance sheet by 50%, and hopefully our cost-income ratio will move from 36 once we fully materialize the synergies to 32, becoming very efficient. Rwanda is a small country, so the best growth strategy would not have been organic because it's very competitive because it's a small country, but an acquisition. Cogebank was number 5 in the market, and we were number 3. So adding the two then made us a very formidable number 2 with a very strong capability for competing, as you rightly said, for the top position in the medium term. Ajara, insurance.
Thank you, and good morning, Chairperson, as well as GCEO and shareholders. A question was asked by Daniel regarding IFRS 17. And Daniel, I'm glad you've asked this question. IFRS 17 is arguably one of the more difficult standards to implement. It was first introduced in 2017, but globally, insurers have struggled to implement this until 2023. And so we confirm to you that the results that we published for 2023 are IFRS 17 compliant, but we also restated the 2022 financial results, which were published under IFRS 4 to IFRS 17. And just to highlight, the profit before tax for 2022 under IFRS 4 was 405 million, while under IFRS 17 was 669 million. And so as a result, we've had a positive income or outcome of IFRS 17 classification. Now, for an investor, IFRS 17 is very important because it allows an investor to see the true performance of an insurance business. Previously, under IFRS 4 classification, it was very difficult for investors to see what the true drivers of performance are. And under IFRS 17, you will see the income statement reflecting what we call the insurance service result. That shows you the profits that come from underwriting. The other thing that IFRS 17 does is it also shows you how the risk profile of the book would be. And as such, if we are not underwriting properly, you will find us to be net loss-making from an insurance service result perspective. IFRS 17, what it does is it makes sure that an insurer such as Equity Life will only recognize the income over the duration of the contract. And so if you're underwriting long-term contracts, the standard ensures that you're earning the profit over time, but also making early recognition for any any loss-making contracts, which means it's a very prudent standard for the investor. So we confirm that the statements are IFRS 17 compliant and are reflective of our conservative and prudent policies in terms of underwriting. You had asked a question around policies, the 9.9 million policies that we wrote in 2023. I'm happy to confirm, as you did say, as at May, we had crossed the 11.5 million mark for 2024, showing strong growth and, of course, showing strong confidence by our members because they're the ones who are utilizing the insurance policies for Equity Life. We currently are focused on the Kenyan market. We, through a partnership with a local partner in DRC, in March 2024, have commenced doing some distribution for risk products in DRC. But as we will progress, you'll perhaps see more from a footprint perspective of the insurance business in the other regions from 2025 and beyond. Thank you, James.
Thank you very much. Just Daniel, maybe as shareholders, we had presented to you insurance business is playing exactly where we had anticipated it. During these very difficult times, we have realized insurance is behaving very different from banking. In our first 9 months of operation, we got a return of 54% on equity Our first full 12 months of operation, the balance sheet increased fourfold, almost fivefold, and yet our return on equity increased to 68%. And simply is because insurance is not very sensitive to interest expenses. And so it's behaving very well and really affirms the diversification on product offering. The regional subsidiaries have given us regional diversification, managing the sovereign risk of a country. But what we have realized is our offering from insurance is helping us to diversify at segment level, customer segment level, and at product level. And that is why we have unified the group under one equity. And it's the one equity then we're also proposing now to have an Apex holding company so that we can have the four groups of companies complementing each other by regional diversification and product offering diversification. We recognize that insurance, it's not just the number of premiums, but the quantum of the premiums. I want to say what we have seen so far has been on two products, Credit Life and Group Life. And now this year, we will be venturing out into health. And we have also strengthened pension significantly. So the growth of the insurance business is anticipated to accelerate going forward. Chairman, allow us to take the other questions before we come to your question. And these are questions by John Zhao. The issue of the commitment about Rwanda has been very well explained, so I will not belabor on that. The commitment we made on 2018 to focus on youth, agriculture, women, micro and small enterprises. This commitment was informed by the need to scale our impact, social impact within society. In 2020, we became the winners of the Oslo Business for Peace Award. And when we looked at it, it was great recognition of the transformative effect that Equity Group has in society. It was promoting embedment or engagement of people within their community because they are stakeholders. On youth, Mr. Jones, we partnered with MasterCard Foundation and launched Young Africa Works. Young means youthful people put to work. And the program entails taking people who have left school, training them on entrepreneurship, financial literacy, giving them a loan to start off business and see how many people they could employ. So Equity committed to do the training. MasterCard offered to provide that training funding to capacitate them. Capacitating them, de-risked them, but we felt because it was startups, it was important to request MasterCard to share the credit risk with us, and they were generous. They took 60% of the credit risk. We took 40% and provided their own fund. Within a period of 3 years, we've been able to train over 680,000 young people, and out of that, we have been able to give loans to 480,000, a loan book of $3.1 billion US, and they have created 1.8 million jobs. And maybe we would share with you the independent validation. In terms of agriculture, we committed in 2018 that agriculture contributes 30% of the GDP of the economies we operate in, and we will endeavor to ensure 30% of our credit book is in agriculture. I'm happy to say, Mr. Zhao, that to date we have now increased our balance sheet contribution to agriculture from 3% in 2018 to 16%, and we are on track by 2030 to have 30% of our entire loan book being in agriculture. This has enabled us not only now to focus on the primary production, but also in aggregation, in processing, and in export business, and agricultural transformation. We are completing the 24th irrigation scheme with partnership with the Kenya government and KfW of Germany. And again, as you can see, these are balance sheets creating ventures which are really transforming agriculture, moving it away from being rain-fed so that we can commit. We have also looked at partnership with IFAD, the part of the Rome-based UN agency on funding agriculture. And together we have been able to get 180 million facility to help small-scale farmers to mitigate and adapt to climate change. And I'm glad to say last year we were ranked by IFC as the bank with the highest number of climate-smart loans that helps small-scale farmers to mitigate and adapt worldwide, a position we hold with a lot of pride. We have continued the effort that we started with UNDP and UN Women, focusing on our women, and a product called Fanikisha, a Swahili word meaning make it possible. And I'm happy to say that Fanikisha suite of products, 9 different segments of products, from iron ore all the way to platinum category of leading, is now the flagship product and has helped us to get 54% of our customer base being women. The last one is micro, small, and medium enterprises, the greatest employer, the informal sector, as we call it in Africa, constituting about 94% of most of the economies. And here again, with MasterCard, we have developed a very powerful entrepreneurial financial training program. To date, we have trained about 3.8 small-scale farmers, and we have converted them into agribusinesses. We have trained nearly 3.6 million young people on business. So essentially, as you like slightly said, we have focused on where our people make a living from. We have the centrality of the lead economy is what we have focused on. On NPL's growth, as the chairman expounded, last year was a very volatile year. We've acknowledged we were operating under a VUCA environment, and that volatility and uncertainty that came with it had significant impact on our borrowers. They had not fully recovered from the impact of removal of interest capping. Previously, interest was capped at 13%, but when inflation hit, the government increased the central bank rate to 13%, and the government started taking deposits or treasury bills and bonds at between 16 and 18. That became the deposit rate, and the lending rates went to 18 all the way to 24 for unsecured loans. And that meant almost doubling the interest rate, and that has caused customers to struggle with repayment. Volatility in exchange rate has made it difficult for imported products. We all know the impact exchange rate moving from 116 all the way it had moved to 160 and now up to 128.5. The impact it has had on businesses, and that is what the NPLs reflect. We have built a dedicated team led by Christine Brown, a long-serving commercial head, and we are making very good progress. And as the chairman said, we are supporting businesses to be able to wade through these difficult times. And we are very glad that our NPLs are 400 basis points lower than the industry average in Kenya. And that is because of the supportive nature that we have taken. Mr. Nzau, you also talked about the role the shareholders can play in supporting us to understand what the foundation would focus on. I'm glad to say our anchor shareholders, the World Bank, has jumped in very, very strongly and has doubled the number of scholarships that we had under Wings to Fly. They have given us nearly 40,000 scholarships, and the Elimu scholarships, which is extended and expanded the Wings to Fly program. MasterCard Foundation has, although not a shareholder, a long-term partner, has helped us to expand our scholarship program for university education. And our largest shareholder, Allies, the anchor 3 shareholders, Norford, FMO, and Rabobank, has come on board to work together in the foundation. So we see shareholders playing part, but we hear you and we shall remain open. I think the suggestion you have made of having a registrar, I think it is by Joseph, to look after shareholders, is something we had started considering, and hopefully we'll have a dedicated officer looking at the registry and helping shareholders to deal with the issues. I think the issue we had on Sally, let me invite the Defense Council headed by our Chief Internal Auditor, Beth, Sam Kitwekere. If you could move in front, the 4 of you, I hope you can also be joined by our Chief Finance Officer. The Defense Council, you can update the shareholders where we are.
Thank you, Chairman and GCU. Good morning, shareholders. As the GCO has mentioned, we created what you call a Defense Council with a team. Maybe they can come closer so that you can see them. We have the Chief Risk Officer, that is Mr. Sam Gitwekere. We have the Chief Information Security Officer, Thelma Kanaka. We have the Director Internal Controls and Compliance, Mr. Paul Wafula. We have Fraud and Security and Investigations, he's not here, Mr. Naftali Mwangi. And we have the Group CFO and Strategic Execution Officer, Mr. Moses Nyambanda. We created, my name is Beth Kithinji, the Group Chief Internal Auditor, chairing the Defense Council. We created the Defense Council to enforce or enable collaborative and integrated risk management. And really the role or the reason we exist is to protect and improve the control environment, risk management and governance processes. So with the team here, you can see the, if you look at the collective experience that we bring to the group, it is essential and is needed for the group, but also it's an opportunity for us to improve the control environment. We are looking at re-engineering our processes and upgrading our systems to ensure that they are fit for purpose and future-proofed, enhancing our risk management processes and our transaction monitoring capabilities. And we have made significant investments in people, as you can see the team before you. I think on cyber defense, which was mentioned by our shareholder, Sally. We have various processes that we have in place. Cybersecurity is one of the biggest risks that we look at and evaluate on a daily basis. And software development, procurement, and implementation create opportunities, and therefore we have specific controls in place to minimize the cybersecurity risk. Our monitoring of incidents and threats using latest technology that we have, and best in class, as you heard, Thelma is the global chief information security officer, the only one in Africa, and female at that, and we appreciate her. So using her expertise and her knowledge, we have implemented latest technologies for cybersecurity monitoring of threats and incidents at our Security Operations Center. We have red team exercises and penetration tests which we use to identify and mitigate any risks that we identify. Thank you, Chair.
Is there any of your colleagues who want to jump in?
Yes.
I'm sure Thelma. The question is so specific, the assurance. But shareholders, as Thelma jumps into answering this question, let me confirm that when the country was under huge stress of cyber attack, we stood up as the only company that substantially was not in any way broken into. And we deeply appreciate the role Thelma has played. Over to you, Thelma.
Yes, thank you, shareholders, thank you, Dr. James. And I think just to add, I think also the reason why, and we're just emphasizing on the latest attack that the country faced last year, is also an epitome of how the organization is committed also, not only on the technology, but also on the people and the team that the organization has been able to pull together from all over Africa. So it's also an epitome that we can give you assurance that we are committed to safeguarding our customer data, our customer funds, and the brand of Equity. And we are well aware of the threat landscape that we are operating with, and we continue to measure our defenses against the latest threats. And as Beth has mentioned, that we continuously improve our control environment and our defenses, and we can give you assurance that we are working collectively now as the Defense Council, looking at not only on the cyber, but looking at the different cyber frauds and on the physical security and across the internal control environment and all our processes in all our channels. And as we are building our products as well, we are embedding cyber security controls and cyber fraud controls into the value chain. So this just to reiterate what our commitment to cyber and defense as a whole.
Shareholders, because of the significance of this risk, we asked Deloitte's Global to come and benchmark us with the best banks in the world. And I'm happy to report that we performed very, very well above the average for the global banks in terms of the defense layers, and we are very, very grateful. I think, Sam, it will be good for the shareholders to hear the enterprise risk position.
Morning. So we follow a systematic risk management process. We proactively identify threats and vulnerabilities in any of our systems. We assess, we mitigate, and we monitor. And we have built capabilities for that across our 3 lines of defense. So Thelma and the CISO team sit in the first line of defense. I have led the second line of defense. I have IT and cybersecurity risk experts in my team who are responsible for helping identify these vulnerabilities and threats in software that is developed internally and software and hardware that we acquire, and ensure that they are risk assessed, they are implemented safely, and then monitoring happens through the Security Operations Center using latest technologies. And Thelma did not mention, but she's overseeing a very substantive program that we refer to as Aspire. It's a very expensive but much needed program for the group to help ensure complete security of customers data, complete security of our networks, of our hardwares, endpoints, and everything else. Thank you.
And maybe I would give Paul Wafula. When Paul Wafula joined us from Dubai, where he was overseeing a group of banks, Asia, Middle East, and Africa compliance risk, we were very impressed with. He came and said, let's map all the risk of the group. And I can share with how many there are. And then we created registers for each of our 14,000 members of staff. Everybody has a register of the risk. So it's not collective, it's personal, and there's several personal responsibility for each of us. And maybe he could brief the shareholders where we are.
Thank you, Dr. James. Shareholders, so in line with what Sam said, in our proactive management of risk, we're able to identify, one, the processes that we have across the organization, which are 1,723. And from these, we identified what could go wrong, the risks in those processes, which so far we've identified about 5,555. And what we're trying to do is to be able to proactively check how the controls to mitigate these risks are working. So ours is to do continuous monitoring, and we're wanting to do this proactively so that we don't wait for things to happen. Now that we know what could happen, we put in place the relevant controls to prevent or detect when those things fail. Ours then is to continuously check how our controls functioning so that we can curb any attacks or any failures before they happen. So that's pretty much what we're doing.
So proactive. Each of our staff is able to do a self-assessment of risk and how they are doing with their register, and we are also able to then hold individually to account for the risk register that they are managing. I think it will be good for shareholders, Moses, to hear the financial reporting. You put all these together and give shareholders report.
Correct, Dr. James and Chairman. Whatever they do, I do have a personal interest on, because if it goes wrong, then the cost of risk to us as a group also gets elevated, and that shows up in our performance. Where I sit, then it's imperative that all of us play together to ensure that we are really keeping that cost of risk low. And all investments that we need to do from a group perspective, again, those are effective to ensure that the overall outcome then shareholders is minimized. Risk can be quite expensive. One of them, as Daniel did mention, the Uganda case which GCO elaborated, could be an incident to show you what actual cost of risk could be. The savings that we've made out of the cyber defenses that we've had are enormous if those were to be quantified. So it's quite an important area for us as a group, and one that we keep really high focus on. Thank you.
And lastly, shareholders, is that this team is completely enabled, and we have given them the systems. And I will ask Michael Coffey maybe to talk about the investments we have made so that we are able to move away from any manual processes to highly automated digitized systems and very strong underlying systems, the latest, with the latest capability, so that we're able to leapfrog into the future.
Thank you very much, Dr. James and shareholders. I think a lot has been said about the stability and also the state of security in terms of being measured by the fraud that we are not experiencing. But part of it has been a significant investment in upscaling our systems to ensure that we have the latest, they are future-proof, and they are well configured and stitched together in terms of the people that manage them, the skills that are required, and also looking at all the international processes that we need to have within these systems to ensure that they are future-proof. The group continues to invest in such systems, and there are so many programs that we are working on to ensure that going forward in the next years will still be stable, will still be available, and there's significant investment that is being made to ensure that continues to happen on an ongoing basis. So I think I'll stop at that. And
shareholders, Michael Coffey comes from Ghana, We brought Sam Kitwekere from South Africa. Paul Wafira, we brought him from Dubai. He's Ugandan. Thelma, we brought her from South Africa. She's South Africa. So your group and your company was able to attract global human capital from wherever they may be. Thank you very much, Defense Council. I hope that Sally gives you the comfort that a lot has been done. Let me tackle the question you raised about Brad and how we protect Brad. The most valuable asset of this group is reputation, and reputation is a Brad. Brad is a promise kept. And if there is one thing we have tried religiously to do over the years, is to keep our promise to our shareholders, keep our promise to our customers, keep our promise to the readers and to the public and to all the stakeholders. And that is what has created the Brad. As Chairman articulated earlier on, we now hold the most highly valuable Brad in East and Central Africa. We are ranked the highest financial Brad in Africa and second. It's not easy to keep, to protect and to build a Brad, but I want to recognize in a very special way and invite Joy Benedicto maybe to talk slightly about how we have tied Brad and culture. Because if it is a Brad is a promise kept, then it had better be an organizational culture. Joy Benedicto is American. She was a vice president of CNN for 15 years and also was the chief executive of Jimmy Carter Foundation. And for the last 5 years, she has helped us to build the Brad to where it is. And now gives us a challenge not to leave a contradiction. And that's why we are pulling everything possible to ensure our operations, our commercials, our shared services, our IT capabilities are also of global standard, so that it's a complete global Brad. Joy.
Thank you, Chairman, shareholders, Dr. Mwangi. Yes, my name is Joy De Benedetto. I've been with the group for 5 years. I am an American. I believe that as Dr. Mwangi said, a promise kept is the brand, and we have to be able to walk the journey with our clients. We have to have transparency, and we have to keep our promises, both in our products, in our relationship management, and in the services that we offer. And I think we also need to do that in the partners that we choose to work with. The partnerships that we have offer us credibility and sustainability in the promise that we're trying to keep to our customers. And relationship management is very, very key, so that we understand what our clients are and our members are in need of, and that we're able to deliver it. And I think that over the past 5 years, what we've been able to show, even to the world, is that we can be an example of a institution, a global institution that just happens to be based in Africa, and that we can deliver quality and consistent services that members need, and that help support their own growth and empowerment, and that can actually stand as an example to other institutions in the rest of the world. And I'm grateful to be a part of it.
And lastly, Joy has given us a huge challenge. The Brad is global. How do we get the business to globalize? And that challenge we have given to Natasha Ansel, and said, how do we globalize our operations? And maybe Natasha, maybe as our team leader, maybe you could speak to the shareholders how it did. Natasha Ansel worked for 28 years with the Citibank. She, for many years, Citibank's Vietnam chief executive, Citibank's Ukraine chief executive, and we have asked her, why don't you organize us to ensure our operations and our commercial matches the brand?
Thank you very much, Dr. James, Chairman, shareholders. Equity is uniquely positioned to lead in the current uncertain environment. Having worked for over 30 years in the top global brands, one of the big challenges is limitations in terms of ability to take the risk in order to drive the growth. And what equity has done incredibly well over the last 40 years is understanding full end-to-end value chain of everything that we do. There is no such thing as too small or too big in our target market. And in the world that is increasingly volatile and uncertain, having that holistic view and ability to assess the risk, and with that knowledge and accountability to enable businesses in our markets where we grow, is ultimately our core value add to what we bring to the economies and to the societies. It has been incredible to see the depth and the quality of the talent. I'm humbled to be one joining the group, knowing that we have risk, knowing that we have operations and the stability of the systems will allow us from commercial perspective to continue to make those strides, to build best-in-class solutions, to leverage on the platform that we have, and to continue to disrupt the markets in a constructive way so that our clients do have opportunity to grow their wealth, to grow their capabilities, and to become leaders in their sectors, in their countries, and across borders within Africa and more globally. So thank you very much, Dr. James.
Thank you very much. So I hope, Sally, you have appreciated that we want to ground this brand on performance. Any contradictions to expectations or to the promise will lower the brand value. But this gives me, shareholders, an opportunity to answer a question that was asked online about James Mwangi's succession plan. Let me answer this because I've been asked this question many times. Succession planning is not earmarking an individual who would take over if James was not to report tomorrow. It's to create a bench of leaders, competent and capable to run the organization and spread across various cycles of working career of individuals. When I look at equity, the board and particularly the chairman will be spoiled of choices on who to pick if James was not able to report to the office. Why? Because we have created an enabling environment for people to thrive. When Brent Malhai from South Africa joined us 9 years ago, he has stayed on 9 years later, and we have seen what he has done with the strategy, including leading us to develop the African Recovery and Resilient Plan. We've seen what Joy, an American, has done with the brand, and they have continued to stay, and I have no doubt this has become the place of choice, simply because we have created an enabling environment for people to thrive, for people to contribute. They feel appreciated. They feel the purpose of the bank is compelling and is appealing to them to continue to apply and to give themselves. And that has enabled us to attract very high caliber staff. We grow our human capital from within, and I'm very excited to see, for instance, when the opportunity to create a chief operating officer for the entire group allows, we were spoiled of choices, but we picked our managing director of Equity Bank Uganda to come in to fill that position. Somebody who has been with the group for the last 27 years. And maybe maybe you could take the podium, people can see who I'm talking about. That is what Equity has. It can grow people from within. We all have seen people like Merintele in the early 30s taking very senior position like financial reporting. They have grown within the organization. But we are able also to grow and attract people like AQ from Sri Lanka. AQ, maybe you could come. We are able to attract people like Wire. Kerobe don't go. Wire, who has been the chief executive of Citibank in DRC, joining the group. We have people like my friend Hughes joining from Vice President of MoneyGram from California. He's Congolese. Willie is Congolese. Christian joining us from Helios to come and do value. Dr. Gatonga, maybe one of the most renowned health insurance, coming on to launch our insurance business. So we can see the ability of the group to attract. So the position of group CEO can be filled from within, people who have been with the organization for many years, who understand the culture, have demonstrated, and the board have confidence in their capability, or it can be filled by attracting talent that will be required at that point in time, like the way we have had Natasha, or those who are studying, or people like our chair of Defense Council, who were from KPMG, went to advise the governor, and then finds Equity her home. So I've not doubted, and that is the least of my worries, what would happen to Equity. I'm certain that we have institutionalized. I don't manage the bank, have created the structures that manage the bank. I play the role of orchestrating the music, but the choir provides you with the music. So the problem would be if we didn't have the choir. And you can see how deep the bench of the choir is in terms of skills, competencies, experience. As we became a global brand, a regional bank, we were able to attract the skills and competencies that matches with our position, because there is always a challenge. Equity over the last 31 years has grown faster than a human being can grow. This team that we are bringing is better than me in the area of focus. The only thing I'm good in, and I teach them, is the equity organization culture and the leadership insights I've gained in equity. So shareholders, I want to assure you that you are sitting well and should not worry about the future of this organization. Succession has been planned, and I'll invite the chairman maybe when he's answering your question to comment on it, because ultimately it's the responsibility of the chairman to ensure there is adequate succession planning for the CEO. But succession is not an individual who takes over, because they can go even before the person they are supposed to succeed. Is having a deep bench of capabilities and competencies, creating an enabling environment that enables people to thrive, and providing a reward and compensation system that can attract anybody. I'm proud of what we have done with our pension, our medical schemes, our group life schemes, so that the hygiene factors of a great organization are in place. Sam, do you want to say something to the shareholders and your experience as a chief operating officer as the others sit?
Shareholders, our chair, our group CEO, thank you. And it's to give you confidence on the team of management that we have, what we are doing at the group, and just specifically, and I know the few colleagues who spoke here ahead of time talked about technology, talked about the cyber, but on the operations side also, we are enhancing our operation. On the front side, we are ensuring that we engineer the processes so that we serve our customers as one equity. The customer journeys, embedding products on the front becomes easier, and then we can have products that emulate the lifestyle of our customers. At the back office, we're enhancing more on technology in terms, again, AI, robotics, process engineering to ensure efficiencies, managing risk through technology. That's what's happening. But also on the subsidiaries, we are very key to ensure that the support reflects a center of excellence. The departments in the subsidiaries become very lean and very efficient in terms of operationalization of the strategic plan. Thank you.
Shareholders, most of you are our customers. I'm sure you are experiencing very unique stability of our systems. The first job that we gave to test the resilience of some when it is reported was to transform your experience with our systems. And I hope he's halfway. By the end of the year, he will have, and by the time he's halfway, the systems have stabilized. So I just imagine what experience you will have by the end of the year when all is done. I know there are many people I could have mentioned, and our chief legal officer is saying, but why didn't you call Ignatius Chicha? Chicha is our treasury director. He joined us from being the regional Citibank group treasurer. He's from Zambia. We have Evans Nyaga in our insurance business. We have David Gata, who joined us from KPMG, New York, and American Express. And all of them have brought enormous. I can see Hannah in the room. Hannah was the country director of the French Development Bank in DRC, and now has joined us to build the corporate capability in DRC. So equity is able to attract talent and competence. And for any gaps that fall in, we now have the capability, the competence, and the brand, and the visibility to attract. Let me close by acknowledging the kind words of Joseph and the acknowledgement of our managing director in Kenya, giving you a branch in Mitugu. We intend to increase branches by about 60 to feed in the pockets that, so your desired location in Chuka, I hope will be one of those 60. And we heard you that you would like a dedicated registrar to look after shareholders' affairs, and we'll look into that. We have heard you, and the next AGM, we hope we'll be able to introduce somebody in charge of that. With that, I yield to you, Chairman, and grateful.
Thank you, James, and management for very ably answering the questions that our shareholders have had asked. I think the last question is for me to answer, but I would like to put some context into my answer. Part of what I'm going to say has already been alluded to by the GCO, that as this organization has become more complex, has become bigger, has spread its wings geographically, has become a systemic organization in many of the areas that we practice, the board realized the importance of building a fit-for-purpose organization. And we couldn't build a fit-for-purpose organization without taking care of the people, the systems, and the processes. I want to talk a little bit about the people. In that last year but one, the board developed a compensation and rewards policy, which was based on a model of shared prosperity. And shared prosperity was driven by the fact that the people that grow this organization, our employees, need to share in the prosperity of the organization. So we developed a total rewards and compensation policy to enable us attract top talent, to enable us develop talent within the organization, and also to enable us retain this talent. And this policy, we needed to make it a predictable, transparent, and accountable policy. And this policy was socialized throughout the organization so that each employee in this organization knows how are they going to be rewarded, how are they going to be compensated. We developed, the management has developed performance metrics on which the reward and compensation is based. And the reward and compensation has short-term and long-term rewards. Short-term in terms of the salary that employees get, their bonuses, and the benefits that they get, like the health policy benefits. And then the long-term, based on the ESOP, some of the long-term benefits, like pension. It was on the basis of this policy that last year, the group board rewarded workers, our employees, in some subsidiaries, and others were not rewarded because they didn't meet the cut that is set. And because the employees already knew what were the metrics, at the end of the year, when the financial results were announced, everyone knew whether they qualified or they did not qualify, say, for a bonus. The executive at the group level is compensated on the basis of the group performance, and the subsidiaries on the basis of the subsidiary performance. It is in view of this background that the group reviewed the performance of the GCO, and we found that the GCO had actually met the criteria for a bonus as per his contract and the agreement that we had at the beginning of the year on his KPIs. He had met his KPIs at the group level. But the GCO, the group board, calculated and offered a bonus to the GCO based on these metrics and his contract. But the GCO felt that one of the major subsidiaries had not met the budget that he had promised the board, and he felt that if the employees in this subsidiary were not going to get rewards, it was not in line with his principles to accept a bonus payment if one of the major subsidiaries had not met their target. The board, of course, was not very happy with that because as Kemodo has spotted in the report that the GCO did not get a bonus, we felt that it would look in the eyes of both our customers, our shareholders, and the community like we are not appreciating the good work that the GCO is doing. But the GCO stood his ground and said on the basis of his principles, he was not going to accept the bonus payment for that year. And it is on that basis that you find that the board, in our integrated report, there is no reflection of a bonus to the GCO. I have just gone a little bit into these details so that our shareholders can know that the board appreciates the great work that our GCO has done, and putting together the kind of team that you have seen today, a world-beating team, has been mainly the work of the GCO. Just mentioning, going on to succession planning, as you have seen, the board has, in putting together this rewards and compensation framework, the group board had its eye on making sure that we had a deep and wide bench. And thank you, James, today for slaying the dragon of succession, which is whispered, mostly whispered and not vocalized in many, among many of both our customers and our shareholders. But I want to reassure them that the board is constantly aware at the fact that you cannot build a company, an organization this size, on the basis of only one person. I do hope that the presentation today has allayed your fears and has demonstrated the fact that equity is not James Mwangi, and James Mwangi is not equity. And as we grow, we definitely are continuing to bring on board global talent because we have become a global organization. I want to thank James very much for the work that he has done for the bank. And as group chairman, I regret that he declined to take the bonus for that year, despite that he had earned it and it was due to him, and it was offered to him. But it was his personal decision not to take that bonus. Thank you very much. I think we can...
Chairman, I can confirm to the shareholders, I declined my bonus in sympathy with our subsidiaries, which didn't qualify, and I felt I owed them a duty to have helped them to also qualify. So this year, I'm confident we will all partake to the bonus. Thank you, Chairman.
Thank you very much, shareholders. First, I want to acknowledge the fact that we have shareholders who are dialed in from more than 33 countries. And this is the power of technology that we are holding this AGM virtually. So they are able to participate, and with more than 2,623 shareholders participating. I thank all shareholders that are dialed in from across the globe, and I trust that we have given adequate consideration to all matters contained in the integrated annual report and the questions that members have raised. And we now have come to the close of the question and answer session and move on to the next part of this AGM. We shall now commence consideration of the proposed resolutions. Agenda 1 is to receive, consider, and adopt the consolidated audited financial statements for the year ended 31st December 2023, together with the chairman's, directors, and auditors' reports thereon. I will request the company secretary to read out the proposed resolution with respect to the financial statements contained in the integrated annual report presented in pages 123 to 242, and to confirm whether we have a proposer and a seconder of the motion.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows: to receive, consider, and adopt the consolidated audited financial statements of the company for the year ended 31st December 2023, together with the chairman's, directors, and the auditor's report thereon. Chairman, Joseph Mute Gituma has proposed, and Samuel Kamotho Mwangi has seconded the motion.
Shareholders, the resolution to adopt the financial statements for the year ended 31st December 2023, together with the chairman's, directors, and auditors' reports, has been proposed and seconded. I now put it to the meeting for voting. Agenda 2 is to declare a first and final dividend of Kenya shillings 4 per share in respect of the financial year ended 31st December 2023 as recommended by the directors. I will now request the company secretary to read out the proposed resolution and confirm if we have a proposer and a seconder.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows. To declare a first and final dividend of Kenya shillings 4 per share in respect of the financial year ended 31st December 2023 to be paid to the shareholders on the register of members as at the close of business of 24th May 2024. Chairman, Samuel Kamotho Mwangi has proposed and Mary Nyambura Kericho has seconded the motion.
Shareholders, the resolution to declare a first and final dividend of Kenya shillings 4 per share in respect of the financial year ended 31st December 2023 as recommended by the directors has been proposed and seconded. I now put it to the meeting for voting. Shareholders, Agenda 3 is to approve the remuneration of the directors for the year ended 31st December 2023. I now request the Company Secretary to read out the proposed resolution and confirm whether we have a proposer and a seconder of the motion.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows. To receive, consider and approve the Directors' Remuneration Report and the remuneration paid to the Directors for the year ended 31st December 2023. Chairman, Johnson Henry Gishiga has proposed and Virginia Nyambura Mwangi has seconded the motion.
Shareholders, the resolution with respect to the Directors' Remuneration Report for the year ended 31st December 2023 has been proposed and seconded. I now put it to the meeting for voting. Agenda 4 is on the election of directors. The directors are for election are Vijay Gidmo, non-executive director. Dr. Helen Geshohi, non-executive director. Mr. Samuel Mwale, non-executive director, subject to regulatory approval. The profiles of the 3 directors are in the integrated annual report on pages 245 to 247. I now request the Company Secretary to read out the proposed resolutions with respect to this agenda and to confirm whether we have a proposer and a seconder of the motion.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows. To approve the appointment of Mr. Vijay Gidumal as a director who, in accordance with Article 100 of the Company's Article of Association, retires from office by rotation and being eligible, offers himself for re-election. Chairman, John Mwaneki Ngugi has proposed and John Wairia Wandugu has seconded the motion.
Shareholders, the resolution on the re-election of Director Mr. Vijay Gidmo has been proposed and seconded. I now put it to the meeting for voting. I will ask the Company Secretary to continue with the second part of this agenda.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows. To approve the appointment of Dr. Helen Geshohi as a director who, in accordance with Article 100 of the Company's Article of Association, retires from office by rotation and being eligible, offers herself for re-election. Chairman, Beth Wangoi Jukuti has proposed and Arthur Runyenje Wandu has seconded the motion.
Shareholders, the resolution on the re-election of Director Dr. Helen Geshohi has been proposed and seconded. I now put it to the meeting for voting. I will ask the Company Secretary to continue with the third part of this agenda.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows. To approve the appointment, subject to receipt of applicable regulatory approval, of Mr. Samuel Mwale as a director who, having been appointed by the board on 11th August 2023, retires from office in accordance with Article 101 of the Company's Article of Association and being eligible, offers himself for election. Chairman, Dina Margaret Kwokaro has proposed and Rose Jacinta Kanyi has seconded the motion.
Shareholders, The resolution on the appointment of Director Mr. Samuel Mwale has been proposed and seconded. I now put it to the meeting for voting. Agenda 5 is to approve the election of the following directors to the Board Audit Committee of the company. The profiles of the directors are contained in the integrated annual report on pages 245 and 247. Dr. Edward Odudo, Non-Executive Director. Mr. Vijay Gidmo, Non-Executive Director. Dr. Helen Gishohi, Non-Executive Director. Dr. Evanson Faya, Non-Executive Director. I now request the Company Secretary to read out the proposed resolutions with respect to this agenda and to confirm whether we have a proposer and a seconder of the motion.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows. In accordance with the provisions of Section 769 of the Companies Act, Cap 486 Laws of Kenya, to approve the appointment of the following directors to the Board Audit Committee of the company: Dr. Edward Odundo, Mr. Vijay Gidumal, Dr. Helen Gishohi, and Dr. Evanson Faya. Chairman, Tracy Athiambo Andrew has proposed and John Wanjau Masharia has seconded the motion.
Shareholders, the resolution on the election of the members of the Board Audit Committee has been proposed and seconded. I now put it to a meeting for voting. Agenda 6 is to appoint PricewaterhouseCoopers LLP as auditors of the company and to authorize the directors to fix their remuneration for the year ending 31st December 2024. I now request the Company Secretary to read out the proposed resolution with respect to the appointment of the auditors and to confirm whether we have a proposer and a seconder of the motion.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows. To appoint PricewaterhouseCoopers LLP as external auditors of the company pursuant to Section 721 of the Companies Act, Cap 486, and to authorize the directors to fix their remuneration for the year ended 31st December 2024. Chairman, Ambrose Makanga Ngari has proposed and Sophia Njeri Muturi has seconded the motion.
Shareholders, the resolution on appointment of external auditors has been proposed and seconded. I now put it to the meeting for voting. Shareholders, we will now proceed with special business of this meeting. The first special business of this meeting is in respect to approval of scheme documents for the Equity Group Employee Share Ownership Plan as set out in the agenda. At the last annual general meeting of the company, which was held on 28 June 2023, this was the 19th AGM, the Board of Directors of the company recommended to the shareholders, and the shareholders passed a resolution to establish an employee share ownership plan for the benefit of the employees of Equity Group, the EGH Group ESOP. Details of the EGH Group ESOP were provided in the circular available on the website. I now request the Company Secretary to read out the proposed resolution with respect to this agenda and to confirm whether we have a proposer and a seconder of the motion.
Thank you, Chairman. Shareholders, the ordinary resolution put forward to you is as follows. That subject to regulatory approvals from the Capital Markets Authority, the draft trust deed and rules be and are approved and adopted as the trust deed and rules of the Equity Group Holdings PLC Employee Share Ownership Plan, and the Board of Directors of the company be and are authorized to consider and approve any changes proposed or required by the Capital Markets Authority, and to do all other acts and things necessary to establish and implement the Equity Group Holdings PLC Employee Share Ownership Plan. Chairman, Frederick Alo Ogendo has proposed, and Mary Kavungi has seconded the motion.
Shareholders, the ordinary resolution to approve the draft trust deed and rules of Equity Group Holdings PLC Employee Share Ownership Plan has been proposed and seconded. I now put it to the meeting for voting. Shareholders, the second special business of this meeting is with respect to ratification of the acquisition of Koja Bank as set out in the agenda. Shareholders, at the 19th Annual General Meeting, the Board of Directors of the company also informed the shareholders that the company had entered into a binding term sheet in respect of the acquisition of Compagnie Generale de Banco, PLC, or also known as Koja Bank. As the binding term sheet for the Koja Bank acquisition was signed after the circulation of the notice for the 19th AGM, the company sought and obtained a no objection letter from the Capital Markets Authority to allow the company to only discuss the Koja Bank acquisition at the 19th AGM and to seek and obtain ratification of the Koja Bank acquisition from the shareholders of the company at the 20th Annual General Meeting to be held in 2024, and that is this AGM. On the 2nd January 2024, the company announced that it completed the subsequent amalgamation of Koja Bank with the company's then existing subsidiary in Rwanda, Equity Bank Rwanda PLC. In line with the no objection letter from the Capital Markets Authority, the board recommends that the shareholders ratify the acquisition by the company of the total of 198,522 ordinary shares, amounting to 99.261% of the issued shares of Koja Bank. I now request the company secretary to read out the proposed resolution with respect to this agenda and to confirm whether we have a proposer and a seconder of the motion.
Thank you, Chairman. Shareholders, the ordinary resolution put forward to you is as follows: that the acquisition by the company of 198,522 ordinary shares in the capital of Compagnie Generale de Banco PLC, Koja Bank, amounting to 99.261% of the issued shares in Koja Bank be and is hereby approved and ratified. Chairman, Alan Karaoke Kahuru has proposed and Joanne Binda Okondo has seconded the motion.
Shareholders, the ordinary resolution to ratify the acquisition of Koja Bank has been proposed and seconded. I now put it to the meeting for voting. The third special business of this meeting is with respect to incorporation of a banking holding company as set out in the agenda. I now request the company secretary to read out the proposed resolution with respect to this agenda and to confirm whether we have a proposer and a seconder of the motion.
Thank you, Chairman. Shareholders, the ordinary resolution put forward to you is as follows: that the incorporation, subject to obtaining the requisite regulatory approval of a non-operating holding company, that is, the banking holding company, as a subsidiary of the company, to be the holding company for all the subsidiaries within Equity Group, comprising the company and its subsidiary that undertake banking and investment banking businesses, that is, the banking business, be and is hereby approved. That the Board of Directors of the company be and are hereby authorized to take all actions necessary to effect the incorporation of the banking holding company, including but not limited to executing and filing all necessary documents and agreements and paying all associated fees and expenses. Chairman, Nicholas Kimanzi Mumo has proposed and Ephantus Gikonyo Chege has seconded the motion.
Shareholders, the ordinary resolution to approve the incorporation of a non-operating holding company, the banking holding company, has been proposed and seconded. I now put it to the meeting for voting. Shareholders, the fourth special business of this meeting is with respect to incorporation of a health insurance subsidiary as set out in the agenda. I now request the company secretary to read out the proposed resolution with respect to this agenda and to confirm whether we have a proposer and seconder of the motion.
Thank you, Chairman. Shareholders, the ordinary resolution put forward to you is as follows. That the incorporation, subject to obtaining the requisite regulatory approval, of a health insurance company in Kenya, the Health Insurance Company, as a subsidiary of the company through the company's insurance holding company, Equity Group Holding Insurance Limited, the insurance holding company, to conduct and undertake health insurance businesses in Kenya, including the company providing capital to the insurance company of a sum of 800 million Kenya shillings 800 million for the share capital of the health insurance company as required under the Insurance Act, Cap 487 laws of Kenya, and also to cater for the operational expenses of the health insurance company, be and is hereby approved. Part B, that the board of directors of the company be and are hereby authorized to take all actions necessary to effect the incorporation of the health insurance company, including but not limited to providing all the approvals required from the company as the sole shareholder in the insurance holding company, executing and filing all necessary documents and agreements and paying all associated fees and expenses, and putting in place all the necessary structure, commercial arrangement, and any auxiliary arrangements relating to the conduct and undertaking of the health insurance business in Kenya. Chairman, Geoffrey Bethel Maoga has proposed and David Mureithi Gitari has seconded the motion.
Shareholders, the ordinary resolution to incorporate a health insurance subsidiary has been proposed and seconded. I now put it to the meeting for voting. Shareholders, we have now come to the end of the special business. Shareholders, voting will close at 1 p.m. and we encourage shareholders who are yet to exercise their voting rights to do so. The results, having been independently scrutinized by PwC, shall be published within 24 hours on the company's website. I will now ask the Secretary to confirm if there is any other business for discussion for which due notice was given.
Chairman, I confirm that there is no other business for discussion for which notice was duly given. Thank you, Chairman.
There being no other business of which notice has been duly given, I take this opportunity to thank you all for attending the meeting. That concludes the business of the 20th Annual General Meeting of Equity Group Holdings, PLC. I take this opportunity to thank our shareholders for supporting the business as it grows during a volatile, complex, and uncertain time. Our stakeholders for helping us deliver on our social impact agenda. Our board members for ensuring the highest standards of corporate governance are maintained, and finally, management for delivering the results. I thank you all for your attendance, and I declare the meeting now officially closed, and I wish to invite the Reverend Evans Miranga to close with a word of prayer. Reverend Miranga.
Shall we believe and pray? Our Father and our God, we are truly grateful for the moments and for the time we've been in this meeting. When we began, Lord, we invited your presence to be with us. And now as we come to the end of this Equity Group Holding PLC 20th AGM, we thank you for your presence in our midst. Thank you, Lord, for the great insights and the deliberations that we've had in this meeting. Lord, we want to commit the board of directors before you. We want to pray for the executive management, all our staff, customers, shareholders, and all investors. We pray, Father, also for all the partners who have partnered with us in this journey. We want to pray, Father, as we continue in the future, that you continue to guide us, even as we seek to fulfill our mission and purpose. Prosper us, O Lord, in all our areas. Illuminate our path and help us to clearly see the step that we need to see and to do. Grant us the courage to embrace innovation and the wisdom to navigate through different challenges. Father, we ask you to inspire us with new ideas and solutions that will help us to drive this organization forward. We commit all the regions and the markets where we are operating in, praying for peace and stability among different communities, even as we seek your indulgence in every areas that they need you, O Lord. Father, we want to pray that you prosper the works of our hands. Grant us the favor in all our endeavors, so that our efforts may be fruitful and lead to meaningful outcomes that will benefit those that we serve and indeed this great organization. Father, as we leave this meeting, we want to commit ourselves to you. Thank you for the 40 years of existence of this great organization. Your hand has been upon us. You have given us success in all our areas. We are entrusting our future into your able hands. Father, fight for us, scatter darkness from before our path, and give us your favor even as we seek growth in this great organization. Bless each one of us who was present here, and even those that have been following us online. And as we leave, Lord, may your hand be upon us. Bless us and be with us. For this we pray, in the name of God the Father, Son, and the Holy Spirit.
Shall now stand for the anthems.
Afrika Mashariki, tuwezeshe kuishi kwa amani, tutimize na malengo yetu. Jumuiya yetu sote tuilinde, tuajibike, tuimarike. Umoja wetu ni nguzo yetu, idumu jumuiya yetu. Equity yetu kweli yatufaa, wafanya kazi na wateja wote, tuko pamoja, lengo letu moja, kuyaboresha maisha ya watu. Mimi ni memba, wewe ni memba, twajumuishwa na Equity yatujali, yatuwezesha, yaboresha maisha ya watu. Mimi ni memba, wewe ni memba, twajumuishwa na Equity yatujali, yatuwezesha, yaboresha kusaidia wote kwa furaha, kwa ubunifu tunaimarika. Mimi ni memba, wewe ni memba, twajumuishwa na Equity yatujali, yatuwezesha, yaboresha maisha ya watu. Mimi ni memba, wewe ni memba, twajumuishwa na Equity yatujali, yatuwezesha, yaboresha maisha ya watu. Huduma bora kwa jamii yetu zinaenea barani mwetu. Washikadau wanafurahia maendeleo wanayoyaona. Mimi ni memba, wewe ni memba, twajumuishwa na Equity yatujali, yatuwezesha, yaboresha maisha ya watu. Mimi ni memba, wewe ni memba, twajumuishwa na Equity yatujali, yatuwezesha, yaboresha maisha ya watu. Tunainuka kwa uwezo wake, Muumba wetu tunamshukuru kwa ufanisi tunaouona. Barani mwetu twasonga mbele. Mimi ni memba, wewe ni memba, twajumuishwa na Equity yatujali, yatuwezesha, yaboresha maisha ya watu. Mimi ni memba, wewe ni memba, twajumuishwa na Equity yatujali, yatuwezesha,